Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the final day of the trading session and looks like, Nifty bulls will eye to reclaim those 26,000 levels. Currently, if you look at the trends in the GIFT Nifty, that has also been indicating a positive start for our own markets. And of course, yesterday we did see a good session. So whether or not Nifty is able to extend gains to the second straight session is something that we'll be watching out for. But yes, for the week so far, Nifty has been down by 1%. But this morning, some positive cues that came in with a phone call on the conversation that took place between Prime Minister Narendra Modi and US President Donald Trump, because they have discussed expanding cooperation in various areas. A statement came out and said that the two leaders have reviewed progress in the India-US partnership and have discussed expanding cooperation in key areas, which includes critical technologies, energy, defense, and even security for that matter. Prime Minister Modi has also posted about this conversation that happened on X, terming that the conversation has been quite warm and engaging, but they did not mention any progress which was related to the trade negotiations. But yes, apart from that, we did see Commerce Minister Piyush Goyal also saying that the US round of, delegation that have arrived in India did see that there are certain common challenges which they aim to solve. But of course, they did not mention that the negotiations which have taken place is related to the trade talks. But yes, we've seen both the India and US talks have emerged after Russia's President Putin did embark a visit to India as well. But yes, we'll watch out whether or not there is some cheer which spreads to the markets. And of course, the Nifty bulls also, which takes any positive cue out of this meeting which has taken place between India and US as well. But yes, apart from that, apart from the home markets, we'll be also focusing on global markets because they remain quite upbeat. We did see that the US markets have ended largely on a higher note, given that investors have rotated out of the AI stocks, and they did see they put money and rotated stocks out of the AI, and of course they put it in the broader end of the markets, as a result of which we did see Dow Jones and S&P 500 hitting fresh record highs. Apart from that, Asia Pacific markets, they also mirrored the moves and started the day on a higher note, mirroring the certain moves in the Wall Street itself. But yes, how all of this cues will impact our own markets is something we'll understand from our experts, which is lined up later in the show as well. We'll be also taking your stock-related queries, so keep dropping us on our live feed. We'll be also discussing some individual stocks later in the show. But yes, before we move on, let's take a quick look at the top headlines, sir. The S&P 500 and Dow Jones close at record highs as Oracle sparks rush out of the AI trade and into the broader end of the markets. Markets in the Asia Pacific mirror the sentiment, while the GIFT Nifty is indicating a strong start for our own markets. Crude oil prices hover near 7-week lows as market focuses on expectations of a growing global glut driven by rising output by OPEC and allies. Gold prices, meanwhile, climbed to their highest level in a month after the US Fed cuts interest rates. Prime Minister Narendra Modi speaks to US President Donald Trump, exchanges views on expanding trade cooperation, critical technologies, energy, defense and security, agrees to closely to address shared common challenges. The call comes days after Russian President Putin's visit to India. India's Commerce Ministry says that the visit of the US delegation served as an opportunity for both sides to have productive exchanges. Discussions included ongoing negotiations for a mutually beneficial India-US bilateral trade agreement. Commerce Minister Goyal says that the current visit is not a negotiating round. Says that the US should sign the deal if they are happy with the offer that India has presented. And ICICI Prudential AMC 10,600 crore rupees IPO opens for subscription today. The price band has been set between 2016 to 2165 rupees per share. The company has already raised about 3,000 crore rupees from anchor investors, with the issue being completely offer for sale, with Prudential Corp selling about 10% stake. All right, yesterday we did see that the markets have snapped about the 3-day losing streak on a dip buying, and Nifty has rebounded from 25,700 odd level support to end near 25,900. So we'll watch out whether the Nifty bulls can be impressed by the phone call conversation which has taken place by the India US and can reclaim those 26,000 levels. But yes, it did reclaim that 50 DMA after an early slip, and among the sectoral indices, all of the sectoral indices were trading in the positive territory, barring some weakness that emerged in Nifty Media and Oil and Gas Index. But yes, what led the gains? That included the likes of autos, metals, pharma and consumer durables that drove the sectoral strength. And the broader end of the markets also saw some good excitement in participation in yesterday's trading session. We did see midcaps rising by about 1%. Small caps also gained nearly 1% yesterday. But yes, the weakness and the trouble that came in from the local currency, because we saw that the rupee hit a record low of 90.37 on strong imported demand. We'll watch out how the currency movement takes place. But today also, if you see, the rupee has also hit a record low of about 90.57 per dollar. So again, we are hitting record lows on the currency front as at this point of time. So certain certain sentiment that we'll be washing out in today's trading session. But yes, apart from the secondary markets, in the primary markets, we have ICICI Prudential AMC IPO, which will be opening today. The price band is set at about 2061 to 2165 rupees, and in the grey market, currently the stock has been quoting about a 7% premium itself. So yes, we'll be watching out for that as well. Coming to the cash flows position of where we stand, FIIs, they were the net sellers in the equity markets, sold stocks which was worth about 1915 crore rupees in the cash markets. DIIs, however, they emerged as the net buyers, bought stocks which was worth about 3294 crore rupees in the cash markets. Nifty put call ratio jumping to about 0.94 from 0.73 levels in the previous session, and the stock that continues to be a part of the F&O ban, that includes the likes of Bandhan Bank and Sammaan Capital. But yes, let's take a quick look at how the pre-open rates are stacking up as of now. If you look at Sensex, is up about 200 points. Nifty also showcasing a gain of about 72 points above that 25,950 odd levels. But to understand, how the trade setup looks like for today, let me go across to Jay Thakkar, who is the technical expert of our show. Jay, good morning. I mean, it's yesterday we did see some recovery finally taking place in the markets. Nifty nears that 25,900 levels, but can we reclaim that 26,000 levels going ahead?
Good morning to you, Lovisha. And yes, Nifty has been trading within this range of say 25,700 to 26,000. In fact, the range has shifted a bit lower in the past few trading sessions. I would say that 26,300 initially, I would say was a very clear resistance which Nifty touched many a times after claiming the lifetime high, but then could not sustain at the lifetime high levels. And we did see some profit booking coming from those levels, and Nifty recently fell until 25,700. Now, within this fall of 600 points, what has happened is the call base has shifted to 26,000 levels. If you look at the cumulative call base of the entire December series, then it has now come down to 26,000 levels. So I think that beyond 26,000, if Nifty managed to close today, it should be considered as a breakout, and one should not be waiting for 26,200 or 300 to happen. I would say that if at all, if you wait for it, then this would be the first case or indication that a close about 26,000 levels would get Nifty to 26,300 to 500 levels again. So now I would say that the short-term trend is sideways to positive with a reversal pegged below 25,700 on Nifty, and on a bank Nifty, it's at 58,500. Only a close below 58,500 should be considered as a negative, one should be trading with a negative bias. Unless that happens, I think overall trend should be positive.
Okay, got it. Jay, what about broad end of the markets? Because they saw some recovery yesterday, but so far this December, we have seen both the mid-cap and small-cap index has sulked in the trade. What can we see going ahead? Can we see further weakness, or is the recovery sustainable?
See, overall, you are right. Nifty mid cap and small cap relatively, rather say, I would say the small cap has relatively underperformed. We have seen the levels of almost 3 to 6 months, lower levels coming in the Nifty small cap, especially, and that might consolidate for some more time. In the near term, at least until this month end. I mean, you could always see a recovery from the current levels, of course, because the overall markets have in fact fallen quite sharply. But then thereafter, there is always a case of a bounce back. But mid cap, I think, would outperform the small cap. So if I have to select one out of these two indices from the long build-up side of point of view, then it would be long, mid cap and not small cap. Small cap, I think, would be at an attractive level for sure, but it might take some time, in fact, to provide a breakout, a larger breakout. Obviously, the risk reward now on the small cap would be relatively better because the stocks are trading at their 3 to 6 months lows. So I think that allocation wise, if one has to allocate within Nifty small and mid cap, it should be in the ratio of 75-25, and then 75 goes to mid cap and 25 goes to small cap.
Okay, got it, got it. But what about metal stocks? I mean, they have been doing well on the back of the Fed rate cut. Yesterday, once again, we did see Nifty
Yeah.
Metal Index extending gains to second consecutive day. Anything that you're finding attractive from current levels?
Metal Lovisha has been an outperformer recently, we have seen, or maybe, it has been a good performer, if not an outperformer. Outperformer has been auto, you would see banking, but metal stocks also have done good. See, if we see Lovisha, entire Nifty, then, there are 15 sectors which have done good. Of them is banking, auto, metals very clearly. Right. Remaining, if you see that it has been very stock specific or selective. If you see oil and gas, it's Reliance, or maybe few of the OMCs which have also again seen some profit booking. Power sector has been, energy sector has been trading negative. If you see pharma has been trading sideways, FMCG has been trading sideways, but then has been stock specific as well. So, the stocks like Marico, so Nestle or Tata Consumer have done good, whereas HUL, ITC, the Coal-Powered Labor have not. So metal out and out, if you see, majority of the stocks have participated, is what I would like to say. Like that of banks, the private sector banks have not participated or perform as great as the PSU banks name, but then they have not fallen. Point one, and they at least bounce back to their life highs, most of them. So that is positive. So metals, whether it is ferrous or non-ferrous, we are positive. DXY could be one of the reason, yes, and the growth within the domestic growth as well would be the second reason.
Okay, all right, Nifty Metal Index. What about the realty space? I mean, yesterday we did see some positive traction, but so far this year, realty stocks have been quite turbulent. So, what can we expect going ahead? Can we expect further, near-term weakness for the Nifty Realty Index?
See, Lovish, I would say that Nifty IT large caps, select mid caps, and within the IT, Nifty Realty, Energy, uh, that is where we have seen shorts, clear shorts by the market participants. So there would be a case of a short covering within Nifty Realty, but there is no case of a long build-up. That means a long uptrend, sustained uptrend. So probably, it's time for some consolidation within Nifty Realty, and whenever index bounces back, I mean, Nifty Realty would always or would always see a short covering happening. So one can look at Nifty Realty as a sector from a short covering point of view.
Okay, all right. We'll be watching out for Nifty movement as well. But yes, let's take a quick look at the first rates, which is coming on your screen. Nifty is back above that 25,900 odd levels, 25,950. That is where we are at as of now. Nearly 0.2% gains coming in for the Nifty 50 as well. If you look at Sensex, showcasing a gain of about nearly 300 points. Also, Nifty also up. So both the headline indices have been showcasing a gain of about 0.3%, so to say. So yes, finally we are seeing that the Nifty has extended gains to about the second consecutive session itself. Yesterday we did see a recovery. Today we are seeing an extension of it. On the other hand, if you look at the broader end of the markets, mid-cap and small-cap index, both of them have been sustaining gains at the current price point. Mid-cap showcasing a gain of about 0.3%. Small caps also showcasing a gain of about 0.4% as of now. India VIX, however, that is relatively cooled off, showcasing that there is certain stability, and of course there's a near-term panic that was there within the traders has diminished as of now. Coming to the sectoral indices or where we stand, all of the sectoral indices have been swimming in the positive territory. Be it your Nifty Auto Index, it is showcasing a gain of about 0.1%. IT Index, once again extending the gains with about 0.2% gains. Nifty Metal Index showcasing good recovery, 0.5% gains coming in from there. Nifty Realty as well, after we were discussing just shortly before with Jay, showcasing a gain of about 0.3%. Let's take a quick look at where the gainers and losers stand on the Nifty 50 at this point of time. If you look at the top gainer on the Nifty 50, that looks like Hindalco. Some of the metal stocks are holding up once again quite well. Nearly 2% gains coming in for Hindalco at this point of time. We did see in the overnight that the precious metals have once again seen quite a bit of a high. Gold prices have gained on the back of the Fed's rate cut optimism. Silver prices also once again hitting record high. So it's from the past three sessions, we have seen that the silver prices have hit record highs in the global markets as well. So yes, metal stocks also rallying on the back of that. Hindalco, one of the top gainers on the Nifty 50. L&T, after Goldman Sachs has upgraded the counter to a buy from a neutral, that is why we can see that the stock has been showcasing some good gains, nearly 2% gains coming in for L&T as well. Tata Steel also showcasing a gain of about 1%. Adani Ports with about 0.8% gains. Bajaj Finance doing well with about 0.7% gain. Axis Bank also doing quite well. On the other hand, if you take a quick look at the losers, Wipro showcasing a bit of a pullback, 0.5% cut coming in from there. Max Health with about 0.4% cut. Eternal with about 0.3% cut. Shriram Finance and Eicher Motors, some of the other losers on the Nifty 50 at this point of time. But yes, coming to you, Jay, I mean, L&T, one of the top Nifty gainers, after we did see that the Goldman Sachs has upgraded the counter from a buy, from neutral to a buy call at this point of time, and they see some certain positive triggers which could be poised for growth going ahead. On the charts, how do you find L&T going ahead?
No, L&T, we are bullish, and see there are a couple of reasons for it. I would say, Lovisha, is one is that L&T have seen you know multi year breakout. I would say the stock was consolidating within the range of say 4,000 to 3,200. Now that is 800 points range within which we saw L&T basically consolidating for nearly since almost the start of calendar year 24. So it took almost 1.5 years for this stock to in fact come out of this range, and that was 800 points range. So simply if you superimpose this range on from the breakout level of 4,000, that would come to 4,800. Very simple. Apart from that, we have seen this stock, from the derivative perspective as well. We have seen that relatively we have seen a good additions on the long side. As of now, in the short term, we did see some profit booking happening because of with the stock, in fact, consolidated or corrected from say 4,100 to say 3,950. But then that seems to be over. I think L&T should definitely be one of the top names within the cap good names.
Okay, all right. L&T is something that we need to watch out for. But yes, let's take a quick look at First Source Solutions and how this particular stock has been doing today. 0.5% gains coming in for this power counter, given that the company has completed the acquisition of its past due credit solution, which is a UK-based debt collections agency through its wholly owned subsidiary. The deal has been finalized yesterday, and after it has received all the necessary regulatory clearances as well. Jay, however, the stock today is showcasing a gain of about 1%, but in the past couple of sessions, it has been range bound, 300 to 350 odd levels. So, what can we watch out next year?
No, this is see, it is a non-FNO stock, but then and majorly I look at the derivatives and the FNO names. But in fact, quantitatively looking at this stock, then it has been able to hold the levels of say 300, 320. So I think that till 320, 300 zone, or maybe overall range, you can say the lower end of the range is 300. That is hold. Positionally, this could be a good stock for a target of say 450 uh, in the near term.
Okay, all right. That's the view coming in for First Source. Let's take another stock in focus, that is your Chalet Hotels. This comes on the back of its significant leadership changes that the company has announced to expand its hospitality portfolio. So the board has approved the appointment of Shwetank Singh, who is currently the executive director, and he's appointed as the next MD and CEO as well. However, the stock has remained quite unenthused at this particular point, flat with a positive bias. Jay, what's your view? I mean, if you look at the stock, it has come off its highs from September from 1,000 to 800 levels. What can we expect in the near term?
We have seen a good profit booking coming in this stock. Now it has come down to the lower end of the range. I think 850 is a good support for Chalet Hotels. So 850 levels are held, then I think there could be some bounce back at least till 960 going forward. We have already seen a good run up coming in this stock, Lovisha. But then in the short term also it seems to be coming near its good base of 850. So from here on, it doesn't make a sense to sell this stock rather until 850 levels are not broken. So if someone is holding, continue to hold out. I mean, I would not recommend a fresh buy here, but for those who are already holding it, 850 should be the reversal or a stop loss, and one can think of around say a bounce till 960, 970.
Okay, 960 to 970 for chalet hotels. All right, let's take some viewer queries that is dropping on our live feed. The first query coming in from Naveen. He's asking the view on Hindustan Zinc and the fresh entry levels that we can watch out for this particular counter. Of course, we've seen that Hindustan Zinc has been gaining quite a bit of attraction on the back of record silver prices as well. But yes, Ajay, what's your view? I mean, today also the stock has been doing quite well, 3% gains. How can the near term pan out?
I think, see, one can get in right now also. Okay, this stock has not participated like any other metal stocks. If you see Lovisha, which are already trading at their life highs. Point one. Point two is that yes, silver has provided that breakout, and that would be a long-term positive for Hensing, which everyone on the street is talking about and knows about it. So that is a known fact. So there could be some profit booking. So just based on these news, I would say that you should not be buying. But then overall, I would say that the stock looks positive. Even in fact, when the silver prices did not hit lifetime high, the stock did move from say 300 to 800. If you see in 2024 first quarter, right? So that is what it is. I mean, I think that its own fundamentals as well as this additional uh, I would say benefit from the silver prices going up definitely has the stock going up. But then on the downside, 500 would now be the support, and with that as a stop loss, one can definitely buy for the medium to long term. I mean, one can definitely target all-time highs out here as well.
Okay. All-time highs could be possible for Hindustan Zinc. Of course, the stock has been gaining quite a bit of attraction in the past couple of sessions. All right, with that, let's quickly move on to our next viewer query. Naveen has been asking the view on Vishal Mega Mart because he's been holding the shares at the price point of 148, and he's asking whether or not we should hold or exit at the current levels. Jay, what's your view? I mean, right now the stock is at about 130 levels. His buying price has been about 148, so about 10 to 12% loss he's been seeing, and in the past 3 months also the stock has been quite trailing. What can we expect next, and what should he do?
I think, see, overall, what I see is the new age companies competition. See, I'm not a fundamental expert, but this is what I would say that the new age companies like probably Instamart or Blinkit would hurt DMart or DMart or Vishal Mega and Reliance, but all of them, they don't want to their model, right? Is what I think, Lovisha, in the near term. So I mean, this stock has corrected quite a lot from the higher levels, but that do we buy into this stock or do we hold? I don't have a reasoning for it. And looking quantitatively as well, the stock price rise or a fall has been quite unusual actually. What happens is basically you get a 2 days up move, 2 days down move, so it's not that clear. There's a lot of noise within the chart as well. So I would rather like to avoid this stock.
Okay, all right. Avoid for Vishal Mega Mart as of now. All right, let's take another viewer query. We have Nana Prakasham who's been asking the view on Tata Steel on how this particular counter looks like. Yesterday, we did see that the company has announced major capex and expansion plans as well, on the back of which Tata Steel yesterday also did quite well. Today also, it's been holding on gains, nearly 2% gains coming in for Tata Steel. Of course, I mean, Jay, you've been quite bullish on the entire metal pack, but for Tata Steel, any levels that we need to watch out for?
See, I think that the 3 days move, I mean, considering today's as well. So would not favor the risk reward from the short-term traders' point of view. But yes, any tips towards 165 should be used as a buying opportunity. For the medium to long term, I think 150 Lovisha. I mean, till those levels are held, one should not be worried as far as Tata Steel is concerned. On the upside, again, it can reclaim the levels of 185 200.
Okay, 185 to 200 levels we can watch out for Tata Steel. On that note, let's go on to our next viewer query. We have Samir Nayak, who's been asking the view on solar industries because he's saying that it's been consolidating for some time. So, is it a good price point to add at this point? Solar industries, today the stock has been flat with a positive bias, but in the past 1 month, the stock has been exhibiting a declining trend. What would you recommend, Jay, for solar industries? Is it a good time to add?
We have seen short build up in overall, energy space, defense space, realty space. So I think that only from the short covering point of view one can think of it, not from the investment point of view. That is one thing which is very clear as far as solar is concerned. We have seen already significant rally coming in this stock. Secondly, I would say that it has come. I mean, the short-term support is somewhere around 11,800. So with that as a stop loss, if someone is holding, one can hold on and expect a bounce until 13,000. Nothing beyond that is what I'm looking as of now.
Okay, all right. 11,800 could be the support levels for solar industries. Right, let's move on and talk about another stock in focus, that is your Honasa Consumer. The stock has been seeing a little bit of attraction today, 1% gains that is coming in the counter, given that the company has acquired Reginald Men owner, which is your BTM Ventures, at an enterprise value of about 195 crore rupees. Now, the company plans to buy the company 95% stake upfront in cash and the remainder of the 5% over the course of the next 12 months. And the brand or the and while the stock has been seeing good traction today, but we did see a brokerage note by HSBC, which has given out a reduced rating on the counter, saying that while it does aim to grow the brand by over 500 crore rupees, but then the scalability in Honasa's core portfolio remains quite uncertain, and they are quite cautious about the profitability about this particular acquisition and how it plans to scale going ahead. But yes, Honasa Consumer, any views on this particular counter, Jay? Today the stock is showcasing nearly a percent gain.
Definitely, this news could be positive, but then overall it doesn't look that positive as far as the stock price chart is concerned. So I would like to say that one can avoid this. I mean, there is no. See, it's been consolidating within the range of say 260 to 330. So that's been 90 points range. If at all bounce back and provide a breakout from 330, then it can move to 400. But then I'm not much liking this stock from the medium to long term space. In fact, rather post listing, it did go up, but then since quite a while it's been trading down, and it is lifetime lows as well. In fact, we are below the listing price as well. So it's not that great as a stock, I would say, from a medium to long term investment point of view as well. So basically, one's preference, Lovisha, I would say, from the help of your channel as well, is that the investments on the long side should be in a very sustained and well focused companies. Point one, and someone is trading on the long side. Point two is that if someone is trading on the long side, that is on the buy side. The buy side trading should also be in the stocks where the medium to long term outlook is positive, right? Just for the sake of 4 to 5% or 6% move, one gets into the trade, and then that becomes a part of the portfolio. On majority of the traders should not be the case. So this is one of the stock which is not from a medium to long term point of view. Providers is not providing that greater clarity to be on the buy side.
Okay, got it. All right, Honasa Consumer, something that we need to watch out for, and you've been quite cautious on this particular counter. All right, let's move on to our next viewer query. We have Samir Nayak, who's been asking the view on Keynes Technology, and he's wondering whether the worst is over for the time being for Keynes Tech. Today, the stock has been doing well, nearly 4% gains that is coming in for the counter. And in the past 2 days itself, the stock has gained about 7 to 8%. Jay, what's your view? Worst over for the counter? Or is it still time to wait until the entire uncertainty goes away?
See, the uncertainty has definitely peaked in the near term, because of which the stock price is corrected and corrected till the levels of say 3,800. Now 3,800 is make or break level for this stock. If 3,800 levels are held, we can see some short clothing happening in this stock at least until the levels of 5,400. That's a big move because the fall also has been sharp. Below 3,800, I would say there could be some further pressure in this stock, but 3,800 in the near term is a good support.
Okay. 3,800 is a good support level for Gains Tech. Right, let's move on to our next viewer query. We have Vijay, who's been asking the view on Patel Engineering. He's been holding about 10,000 shares at a price point of 65 rupees. But yes, so the stock so far this year also has been quite the underperformer. And right now the stock has slipped to about 30 rupees per share. So it's quite significantly down from his holding price. Jay, what would you suggest? Should he exit at the current price point and book some of the losses, or can he hold the counter?
There is a good amount of divergence right now, so there can be some bounce, but I think sell on rise should be the strategy in pertaining.
Okay, sell on rise for Patel Engineering. Right, we have another viewer query that is your Alex, who's been asking the view on Wipro emphasis on a risk reward ratio when compared to midcap IT, which has already run up quite a bit. What's your view, Jay? Any thoughts on the large cap IT names, Wipro and Infosys? Both of them have gained some traction in the past 1 month. But going ahead, do you expect this to sustain?
Yes, Lovisha. As I said, that IT is likely or a very high chance of IT, providing us, a good upmove in the near term. In fact, TCS also looks positive. So all of these large cap IT names can see good short covering happening. And if at all there is a trade deal happening, that could positively be sentimentally positive for this overall equity markets and IT as well. But we are seeing early signs of short covering happening in these names. So yes, I think one should be focusing on TCS, Infi, and Wipro as well. From the short covering point of view, otherwise is right that mid cap IT has already been performing or relatively outperforming the large cap IT names like that of PSU banks, outperforming the Nifty private sector banks, right? So that's how it is.
Okay, all right. That's the view for the entire IT sector as of now. Let's take another viewer query. We have Vaibhav, who's asking the view on Sirma SGS technology because he's bought it at about 849 rupees, and he's asking whether or not he should still hold it at the current price point. Sirma SGS, any thoughts on this particular counter, Jay? Because we did see the stock hit a record high on the back of its good Q2 performance, but since then the stock has relatively cooled off.
I think that see Sirma from the medium to long term perspective looks positive. In the near term, the support is at directly 650. So that is the only concern that risk reward point of view. If someone is actually wanting to get into stock, then the view should be really medium to long term, wherein one can see the downside of 100% would be comfortable with that. Then yes, otherwise no.
Okay, all right. That's the view for Sirma SGS. Let's move on to our next viewer query, where Shweta Naidu has been asking the view on Varun Beverages, and she's asking whether she should average or book losses because her buying price has been at about 537, but right now the stock has been trading at about 479 rupees per share. Jay, any thoughts on Varun Beverages? Because she's holding at a loss at this point of time, but do you see a run up or do you see an optimistic horizon in the near term?
There has been short build up clearly in Lovisha out here in
Right, I think Jay's network has frozen at this point of time.
stop
But
loss should be
yes, Varun
440.
Beverages, like we were
440 is the
talking
stop.
about, nearly 3/10% gain coming in for Varun Beverages. But yes, in the past 1 month, we have seen that the stock has gained by about 4% itself. But yes, coming to you, Jay, finally we got the line back. Varun Beverages, what are your thoughts?
530-40 is what is likely. So one can definitely average with a stop loss of 440.
Okay, all right. 440 is an averaging price for Varun Beverages. All right, just one last question before we let you go, Jay. I mean, we discussed a range of stocks, but what are your top picks at this hour?
See, from the IT space, I like TCS, Lovisha, very clearly because of short covering, and there is a very high chance that after four negative close in TCS, this could be the positive quarterly close. So, since previous four quarters have closed negative, TCS could see a positive quarterly close this quarter, and that could be some positive. The Q4 FY26, I think that could be positive for TCS, point one. So that is bullish target of around 3,500, stop loss of around 3,000. So risk of 1 is to 1.5. The second recommendation would be from the FMCG name, that is Marico. From positionally, I like this stock. I think on the downside, the stop loss can be 690 and the target can be around 800 positionally. So Marico looks bullish within the FMCG names. If I have to look from the auto name, then Bajaj Auto Lovisha. I think from the short covering point of view, Bajaj Auto looks positive. It can take some time, although the numbers relatively are less positive as compared to his peers, the monthly sales numbers and all of that. But then he's a good short covering candidate. So I think with a stop loss of 8,500 positionally, these are all positional recommendations. I mean, you can take that as a one quarter recommendations also. So with a stop loss of 8,500, one can look out for the target of 96 to 9,800 as well on Bajaj Auto positionally. That's from the auto pack. From the metal pack, I would say that yes, Hindustan Zinc is positive, and I think the stock can head towards 600, 640 as well. So that could be one stock from the metal space, and which I'm liking in the near term. But apart from that, Vedanta also is one stock. Obviously, it's a holding company of Hindustan Zinc, so it could benefit out of it. But then Vedanta above the levels of 500 till it holds 500, I think one can look out for a target of 600. So that will look from the metal space, right? These are the top trading ideas from the medium to short to medium term perspective, Lovisha. Vedanta, Hinsing, Bajaj Auto, Marico and TCS.
Okay, all right. Those are the stocks that we need to watch out for. All right, Jay, with that, we have to let you go, but thank you so much for your time and joining us.
Thank you. Pleasure being on your show. Looking forward as well. Thank you, Lovisha.
Thank you. All right, let's take a quick check of the markets before we move on to our next guest of the show. We have seen that the Nifty has reclaimed finally that 26,000 levels that we were hoping for. And you can see 2634, that is where we're at. 135 points gain coming in for the Nifty 50 index, nearly 0.5% gain coming in for the Nifty 50. But yes, Sensex also showcasing some good gains, nearly 400 points gain coming in for the Sensex as well. Majority of the sectors have been trading with a positive bias, barring your Nifty IT index, which is seeing a bit of a profit booking after good run up yesterday. You can see Nifty IT index flat with a negative bias. Some of the stocks which have contributed to the loss of Nifty IT index, that includes the likes of Infosys, Wipro and HCL Tech. All of these three have been sulking in the red as of now. But yes, barring that, Nifty Auto Index once again showcasing some good gains. Pharma Index also showcasing good gains. Realty Index on the positive front. Mid-cap and small-cap indices have also been participating well in this market. So yes, all in all, the market texture looks quite upbeat, because if you look at the advanced decline ratio, it has been 2:1 at this point of time. But yes, with that, let's quickly move on to our next guest of the show. We have Kunal Vora, Head of India Equity Research of BNP Paribas, joining us. Kunal, good morning. Finally we have reclaimed those 26,000 levels. But yes, some positive progress has come in from US-India front, where both the Prime Minister and President has spoken over a conversation over a phone call. Do you see this as a positive sign towards a definitive agreement going ahead? Because it's been 9 months since the tariffs were imposed on India.
Yeah, thanks for having me. Good progress what we are seeing right now. Over the last few weeks, the talks have been happening. It looks like the news flow which is coming in is positive. I think over the next couple of months, something positive should come out of this. Where it really matters, like more than the equity market itself, could be like currency, FI outlook, FI inflows outlook could improve if a trade deal gets signed. Also, we've seen some slowdown in exports recently. That's something which can get addressed if a trade deal gets done.
Okay. But Kunal, it's the last month of the year, and fairly it's been a year of consolidation. So how do you see the market sentiment to pan out next year?
I mean, year has panned out like largely in line with our expectation. At the beginning of the year, we thought that this could be a year in which markets could give single-digit returns. We are like right now tracking at about 9-10% levels. We did believe that broader markets could underperform the large caps. That's also largely played out. For the next year, we are more optimistic after 2 years in which we've been saying that market returns could be single digits. We believe that in CY26, we've just come out with our outlook report. We believe that the returns could be better. It could be almost like mid-teens, 15% kind of returns is what we are expecting, with a year-end target of 29,500. And we believe that's going to be largely driven by earnings. We are a lot more optimistic about earnings going into FY27 or CY26 compared to what we were at the beginning of this year, considering the steps which have been taken by the government and what we are seeing on the ground from our high frequency indicators in the last couple of months.
Okay. So about 10 to 11% upside that you see from the current record high levels. Now, this month we even saw Nifty hitting that record highs, but there was no participation that came in from the broader end of the markets. So do you expect the trend to reverse next year, or is that still some time away?
We expect the same trend to continue in CY26 as well. I mean, like while the investor sentiment is slightly low because mid and small caps have not done well, but if you look at from the highs, I mean, there was a lot of froth which had got built in, and some of that has got corrected. We believe there is more of that which could happen. Even now, if I look at Nifty mid cap trading at a big 40% premium compared to Nifty small cap trading at 20% premium, these are fairly elevated levels. So our view remains that the CY26 returns will be driven by large cap oriented sectors, which could include private sector banks, telecoms. We expect a revival in consumer staples and automobiles. So these are the sectors which we believe could drive CY26, and that will be fairly large cap oriented sectors and not really mid and small caps.
Okay, not really much participation from the broad end of the markets then. But yes, so, coming to the rupees fall, once again, rupee is seeing a fall, record low fall. Today also, it has hit a record low at this point of time. But, despite having a strong GDP print, what do you think is driving this disconnect of macro strength and, of course, the currency weakness?
Typically, Indian rupee has been depreciating by about 3 to 4% every year. So as we speak right now, it's about 5%. So nothing really exceptional. And like what's happening is there are a few factors which have been driving it. We've seen some slowdown in exports recently. Our imports remain elevated. We've seen FII selling. We've seen many of the foreign promoters also selling. RBI has lowered interest rates. So many of these factors seem to have resulted in a slightly higher depreciation compared to what you would normally expect. I would assume that if the trade deal does happen and if FII flows come back, at least like the selling reduces, and like we've seen FII selling in last 3 out of 4 years, if some of that eases, that will help the rupee.
Okay, all right. Some FII participation, but I mean, the FII participation still remains quite low. So with the US markets already performing so well, and yesterday we even saw US Fed chair also downplaying some of the inflation concerns. And on the back of that, today also the US markets have done quite well. I mean, we did see that after Oracle warning about some higher AI capex spending, still the investors were trying to rotate out of the stocks, and they spent it into the broader end of the markets, as a result of which Dow Jones and S&P 500 has hit record highs. Do you think it's still going to take some time for FIs to make a comeback because they're already quite invested in the developed markets?
Yeah, I mean, our view remains that the markets in CY26 will continue to be driven by the domestic investors. From a FI perspective, if you look at CY25, what we saw was Indian earnings growth slowed down meaningfully. Currency also was depreciating. So from a dollar perspective, they were looking at like mid single digit, maybe at best high single digit returns in India. And if you look at overseas, they have been playing the AI plays in the US and like in Asia. If you look at China, Korea, many of these markets do benefit and they do have plays on AI. So in a hot market, which we saw last year, the interest levels in India were low. We do expect I mean, our global strategists do expect that this trend could continue also into CY26. But at the same time, as and when that play eases, what you could see is interest coming back to a market like India, which is seen more as a defensive, wherein earnings growth could be strong, like say about 15 to 17% is the current expectations. Domestic flows also continue to provide a very good hedge to the market levels. So for now, I mean, like see the last marketing which I did, which is last month, I met about 30 investors. The feeling which I got was that there is no rush to come into India. At the same time, I think what will matter is what happens to the global AI trade, which has been like really driving the markets overseas.
Okay, all right. But yes, I mean, you did mention that FI participation remains quite low at this point of time. And then, the US trade India overhang seems to be continuing. So, I mean, while they are, we were expecting that the AI bubble, anti-AI trade is going to benefit India. But right now, it seems like that seems quite a bit unlikely. So, I mean, how are you placed in IT sector? Do you also see this risk-reward ratio favorable at the current price?
See, in IT services, our overall view from a portfolio perspective is like slightly negative. At the same time, I do see a few positives there. If I look at CY26 or FY27, from current low single digit CC revenue growth, we do believe that there's a possibility we get to mid single digit growth. Our analyst does believe that by March quarter, you will start seeing some improvements. Also, from from a dividend yield perspective, FCF yield perspective, the valuations right now are amongst the most compelling which we've seen in quite some time. At the same time, the debate still remains on whether the concerns which we've seen in last couple of years, whether they are cyclical or structural. Our view still remains it's cyclical, but like just cannot completely rule out that there is some element of AI hit which we are taking right now, and some of the concerns could be structural. So the way we are positioning in IT is that we feel that CY 26 could be better. At the same time, there are better opportunities in India place, which includes the private sector banks, and generally the Indian economy recovery is what we would be playing on. And the confidence there comes from various reforms which have already been taken. So it's not that we are banking on new things to happen. GST rate cut has happened, like interest rate cuts have happened, income tax rate cut has happened. We are seeing some positivity in macro. So we believe that better place to be in right now really remains the India economy story instead of exporters.
Okay, got it. Let's talk about one particular space which has been gaining quite the headline at this point of time. That's your EMS stocks. They've seen a good rally in the past, but one company's lack of accounting disclosures has cast a shadow on the entire space. So, what's your assessment going ahead from this particular sector?
So I won't be able to comment on any specific company, but the way we look at EMS right now, we like the growth. If I look at the NSE 200 universe, EMS companies offer amongst the best growth. Many of these companies, even in FY27, they could end up with 35-40% earnings growth. Having said that, there was a lack of valuation comfort there. Even after the steep correction which they've seen over the last 1 year, many of these stocks still trade at anywhere between 35 to 40 times FY28 PE, which is not really cheap. But what we see right now is because of the concerns, we've seen broad-based correction in the EMS space, and the valuations are looking more favorable for someone looking to enter into this high growth space.
Okay, got it. But yes, we have discussed IT, EMS. What else? What are your top sectoral bets for going into 2026, and anything that you are avoiding or keeping on the sidelines at this point of time?
So, what we are really chasing for CY 26 is largely the sectors in which we see high earnings growth visibility. Starting with the largest one, private sector banks is something which we liked in CY 25. It's done well, and we expect in CY 26 they could continue to do well with very strong earnings growth of anywhere between 15 to 20%, 25%, which we are projecting for some of them. We continue to we expect telecoms to continue to do well. That's a sector which had a good rally in CY 25, and we do expect by middle of this year, like CY 26, there could be one more round of tariff hike. So that sector continues to provide very good earnings visibility with strong sales growth, declining capex, strong EBITDA growth. So that continues to provide good visibility. We also like some of the GST related plays. So automobiles is a standout there, which is one sector which has seen the biggest benefit of the GST rate cut. Our view is that PVs will see very strong growth in CY 26. It will continue. Our expectation is that they will see high single digit volume growth, and with that, earnings growth could be well in double digits. And one sector which we've been become contrarian positive on after being negative for a very long time is consumer staples. In consumer staples, again, we believe that the benefits will come in two phases. Initially, you will see volume growth, but in the second phase, sometime next year, we also expect price increases and margins to go up. So these are the four sectors which we like the most right now. On the negative side, as I mentioned, still lack of complete visibility on the IT services recovery. So still not very enthusiastic about that space. And a few others like cement and consumer durables, some of these sectors don't look as exciting. Even pharma, there are certain one-off opportunities which they were say benefiting from, which start fading away. So that's a space which we don't like much right now.
Okay, all right. Consumer staples, durables, and IT sector, something that you are cautious at this point of time. But yes, on that note, we have to let you go, Kunal. Interesting conversation, and thank you so much for your time.
Thank you. Good talking.
All right, let's take a quick check of the markets of where we stand. If you look at Sensex, still holding gains with about 350 points. Nifty also up by about 100 points. 26,000 levels, that is what we are sustaining at this point of time. But yes, the broader end of the markets remain quite buoyant. Mid-cap and small-cap index, both of them showcasing gain of more than 0.5%. From the sectoral pack, what is doing well? Nifty Auto Index showcasing a good gain of about 0.4%. Nifty Metal Index, one of the top sectoral performers, 1% gain coming in from the metal basket, extending the gains to about the third trading session. Nifty Private Banks also holding up quite well. Nifty Realty also extending the gains to about the second consecutive day. FMCG Index, however, on the sidelines. Pharma Index also showcasing a very mild gain of about 0.2%. What is not doing well? The profit booking, which has emerged in the Nifty IT pack, flat with a negative bias at this point of time. So yes, yesterday we did see a good recovery in from the technology space, but today once again we are seeing that the Nifty IT index has been succumbing to certain selling pressure with about 91 points decline. But yes, so whether or not Nifty sustains this 26,000 levels is something that we will be watching out in the second half of the trading session, and whether or not Nifty can extend its gains to the second consecutive day is something we'll be tracking and understanding from our technical experts and of course the fundamental analyst, which we will be having at about our closing bell at about 3 p.m. So yes, with that we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand whether or not Nifty has sustained that 26,000 level with our experts, and also discuss what the stocks have grabbed the headline. Until then, signing off, do stay tuned to moneycontrol.com.